Good evening, everyone. Uh, the panel is the last for the day, and I am assuming a lot of you are mentally exhausted, but we'll try to make it as exciting as possible as the payment space is. Uh, to start with, as you can see, our topic is data-driven innovations in the payment space. So we have seen that, financial institutions are using data as an enabler for their business. Data is the new oil, the kind of the quantum of data which financial institutions are using, the kind of channels they're using. A lot of it is traditional, social media, alternate data. But payments data adds to this pool, and it helps you with that, again, that added data set to do your analytics and to, for that financial institution to do the cross-selling, customize their products, benchmarking. Also, data, as we have seen, is, in terms of alternate data, if I can say, is that, on the credit piece as well, it's directly the credit risk is directly proportional. The credit risk of a consumer is directly proportional to the need for alternative data, right? So we have companies, a large company, who used payments as a hook to acquire new customers, right? They use payments data to first sell to the ETB, then payments product to sell to the ETB, then they move to the NTB space, sold their payment products, and with the help of that, they started cross-selling, with the help of the payments data, cross-selling the core banking products to the NTB customers as well. We have a recent financial service company also launching a credit underwriting model. It was a 3-dimensional model. Again, so it has, again, data inside like credit bureau, also a lot of, the sentiments or the confidence from the customers using various social media channels, using various handles, and basis that to see what kind of other transaction data, like you are doing a bill payments using BBPS, which also helps us to see what kind of what kind of transactions the customer is doing. So yes, over to my panelists here. Just to start with, Kohinoor, what is your point of view on the topic which we are discussing today?
I think if I kind of look at our business, as in we at BharatPe being one of the main offline aggregators, a large part of our business model is actually based on data, right? So the critical information that we have access to is that for a small merchant, what is his daily transaction level, right? How much business he is doing. And these are businesses who are not getting access to organized finance, right? So that is the important information that we are today leveraging and lending to these businesses, right? So that is like a bread and butter for us, right? But having said that, there are other aspects also that we have to look at in terms of data, and not just how it's driving business, but also in the sense how it can stop leakages in the system, right? So today we are leveraging a huge amount of data to identify frauds, right? Fraud both in terms of at the transaction level, but also in terms of fraudulent merchants who are being set up, right? How we can quickly detect before transactions happen on them, right? We're doing a lot of analytics on that. We are also doing a lot of analytics in terms of how we can leverage AI to do the merchant verification, right? The shop verification, the image sorting, a lot of things that we are doing on that side. Now, while all these aspects are important, we also have to be cognizant of the fact that with the new DPDP guideline coming in, we also have to be very careful of how we take care of this data, because we are either a data fiduciary or a data processor, right? And in our business, we are both. So we have to be very careful on those controls that we are putting in, right? So I think there is tremendous room to grow the businesses with the use of data. as long as we built our solutions in a compliant and regulatory governed way, right?
So I'll talk firstly purely from the perspective of payments. And if you think about why we are in the business of payments and why do merchants choose us, I think it would be due to two reasons. One reason is that we obviously give the merchants the best checkout experience. We give the merchants the best success rate. And second is that we enable consumers to come to the merchants so that they can obviously spend more and grow their sales. And I think for both of these to be extremely successful, data is a very big enabler for us. Now, payments by itself is highly regulated, and therefore, I would think that even within the realm of regulations, there is a lot that we can do just with the available data as a payments company. So, for example, and I'll talk both from the perspective of offline and online, but most importantly, if I'm able to identify a customer at checkout and I'm able to tell the customer, prompt him of the various payment options that he would prefer to pay with, and the options could relate even to a buy now pay later option, it could relate to a UPI checkout option, whatever be the case, but I have the intelligence to actually prompt him to go to the right type of payment option. That in itself is one part of the success rate puzzle solved. Second, in terms of bringing in more sales, for instance, that can only happen if I have enough data to tell my merchant as to where this customer is likely to shop more. And that's possible because I have so many touch points today, ranging from multiple merchants transacting in a grocery store to an electronics store to a jewelry store. And that intelligence, if I can bring both to the offline and online world, it's very, very powerful for the merchant to also use and start to prompt him for the exact kind of products that we know he would want to buy. So for us to really differentiate within payments, it's an extremely important enabler, and it helps us both in terms of improving success rates, improving authentication, for example, with the whole tokenization regime. How am I able to provide more intelligent data so that the issuer can authenticate better, faster, can even eliminate certain types of authentication which is more tedious for the user. So I think all of that goes a really long way, and it obviously enables us to provide a really seamless experience to merchants, and I think that differentiates us thanks to the data that we use.
I would sort of take a stab at this more at an industry level rather than at a company level. The payments industry has been using data for donkey's years. That has actually, what has just happened is that the quality of data has continuously improved and the quantum of data has continuously improved. I think one free advice that I can give, that in this world of massive data pools, please do not lose common sense while making decisions. A lot of time when you start hammering data too much, it starts giving you and telling you what you want to listen. I think that's the one piece of assessment that I have seen over the last 20 years of working within the industry. Coming to the topic in specifically as to how will it drive innovation and an explosion, I look at it from three facets. One is there is massive opportunity of earning consumer trust with the right usage of data. That has been one of the biggest limitations of both the payment and financial industry for many, many years. I think how you use data, I think to me this is going to be one of the biggest use case. Second is core consumer experience enhancement. I think one of the panelists in the earlier panel discussion was talking about the fact that they still continue to get 50 phone calls about asset products which they do not want. To me, even in payments, I would want to use data in terms of what Tanya just alluded to, that our ability on checkout, for example, to seamlessly offer the product that you believe the consumer has the most priority to use. To me, that's the second side. And third, to me, is security and regulatory. Make sure that you use, just an example, correct. When we have a lot of data, then we have a lot of information, and then we push our people to give you a lot of insights. Okay, that's just the general flow. And then somebody will come and tell you that, you know what, this is the massive drop rate which is happening here. And then you start innovating and then start questioning, can I just completely take off this stuff? Correct. Like the whole idea of could we take away the CVV, mandatory CVV entry actually came from the fact that we as an industry saw a lot of drop off, and then Visa and Master came out with solutions where you could do a non-CVV based transaction. That's right usage of data. You identify what are your customer pain points, and then go and inject solutions on that. So to me, that builds trust, security, and obviously it is regulatory compliant. I would want to use, and all of the 3 points that I've said, I don't think would have been any different 10 years before. I think just the quality and the output that you can give to your consumers to fundamentally enhance the consumer experience is the big opportunity today.
I'm Swastik. I'm the founder of Winvesta. We are a cross-border financial services firm. We do cross-border payments and offshore investing. I think we have quite a few specialists who have mentioned already. So I'm going to start with actually a founder's journey briefly, right? When there is no data on the 0 to 1 scale. Because you start with an intuition of, hey, there's a problem to be solved. And when you're trying to solve the problem, you're not really worrying about the data. You're just trying to acquire customers. And as you mature, you recognize, hey, where are all these bottlenecks, right? Whether you're acquiring customers, whether you continue to engage them, how do you grow revenue pool, how do you, start moving profit pools towards you from whatever the default behavior otherwise was. And that's when the data really starts becoming oil, right? Where we see it then is that at every phase of whether we are acquiring these customers, and that improves the quality of our onboarding when we're thinking about fraud mitigation, and then you have to start compounding the issue because we're not purely in a domestic environment. We're trying to verify a merchant who is doing transactions across borders, and as well as we also service freelancers who are individuals. So we've got to then start building systems for mitigating fraud. And then, of course, that does need to be extremely sophisticated because as soon as money moves from one regulatory regime to another, it's been lost. All right? Like some of the VCs were looking for great ideas in the last panel. A great idea is to actually invest into fraudsters because the TAM of that industry is 10 billion plus a year, right? If you could invest in fraudsters, that is. And then for us, the way we look at payments is we're analyzing it at every juncture, all the way to the volumes that we're doing, to a place where that original intuition's now a real-time, data point in terms of live for your sales teams to recognize who you've onboarded, but how well they really did get activated, and that changes the model of how you're acquiring these customers as well. Are you able to retain them? And then there's another issue over there that, is your product not good enough? Why are they not coming back to you at times? Is there an alternative that they're using as well? Or was it possibly a fraudulent issue? And that's where data can't answer those questions. You still need to find ways, you still need to innovate to try to find something else over there. And then of course, we're also trying to run OKRs, which are investors, which all of us aspire to, right? Reaching higher volume as well. And are you absolutely sure that the new volume that you're going to reach is going to be as honest as possible, right? These are all questions we need to grapple with. So data definitely helps us solve for a lot of these things. But I want to also mention about the things that it doesn't help us solve, and that's where we need to continue innovating and seeing how we can do it. So the way we've come to as a structure is finding and ensuring that every team is able to create a data pool for itself, whether that sits and pulls out information straight from our backend systems which sit on AWS, but someone who is unsophisticated can go and create a new report which is very specific to their job, and ensuring that all of these specific parts in the value chain, all these specific levers that we're trying to use are being addressed well. So it's a slightly different answer, but I wanted to give this perspective as a founder of how you think from a 0 to 1 journey of creating a place where you have only intuition to having real life data as well.
Yeah, Rishabh, can you speak, please?
Yeah, can you hear me?
Yeah, we can hear you loud and clear.
Wonderful.
Yeah.
So first off, sorry for being on a large screen behind all of you instead of on a nice chair next to you. Due to some last minute exigencies, I wasn't able to come to the venue. Heard a lot of very interesting insights from the other panelists. I come here wearing a slightly different hat. I work with a company called FloBiz, which has had some forays into payments in the past couple of years, but we are primarily an invoicing, billing, accounting software provider for MSMEs. And the kind of data that we get is very transaction level data, purchases, sales, what kind of products are moving. And those kind of data points allow us to build some pretty interesting payment products. So for instance, the last payment product that we had built was a product called Smart Collect, which was solving one of the big collection problems that a lot of MSMEs tend to face. So with software, we were already going about 40% of the way, which was, giving more and more reminders through WhatsApp and, various other means. But if you were able to not just send payment links, but also do reconciliation for some of these businesses, that made a huge difference. So in terms of, how we used our, data points that we internally got, was that when we got our first level of data, which was mostly, like I mentioned, transaction data, then couple that with payments data, we started to see some very interesting relationships between various, merchants, users, and who they are doing business with, what kind of business are they doing, is it GST business, non-GST business, and then those kind of data points help us to build things like embedded finance products. So, for instance, if somebody is able to do, let's say, 100 rupees worth of business in a month with a particular with a particular merchant, then we were able to build specific credit products just for that lane, just for those kind of specific use cases where underwriting those kind of businesses and those kind of transactions was a lot simpler, revolving credit kind of facilities. But overall, the other hat that I wear apart from working is a legal hat, and generally for the payments industry, there is a large problem around what the new Data Protection Act is going to do to the data pools that most payment companies have these days. And over there, we are looking at some new vistas and new ways of how data is being collected. So like in 2017, when, for instance, the GST regime came about, there was a whole huge change in how businesses approached, indirect taxes, how they looked at input credits. Similarly, I think data earlier, which was, sort of like a wild west in many parts of the world, in terms of, you could gather whatever you wanted and use it the way you pretty much that you liked. Uh, there has been a huge change over there. And although there's still a lot of clarity that is yet to come, but things like a consent and purpose limitation, a general requirement that minimum amount of data needs to be collected, all of these things will sort of bring out new kind of challenges in terms of what kind of data payment companies can collect, how can they use this across different data pools, and what was the purpose for which this data was given. And in general, there will be a lot of requirement for various teams to understand that, how these data pools can interact. So, yeah.
Yeah, thanks, Rishabh. So to add to it, since you mentioned embedded finance, and in the last panel also, I think one of the panelists was talking about embedded finance. Just to add a point here, obviously we are talking about how data is helping improve the end consumer more from a detail side. Also, one of the case studies, what I had seen was this was a B2B use case where the financial institution wanted to embed commercial credit card. So, which is again, commercial credit card is an alternate form of commercial lending. Usually, you give working capital lending, you're underwriting the entity and giving a commercial credit card. So, they wanted to embed it into an insurance use case. And today, they were seeing how to underwrite hospitals and see what could be the alternate underwriting ways to give commercial credit card and against the receivables. So what they did is that it's a B2B use case. Insurance companies, hi. So insurance companies were anyway paying to hospitals, right? Hospitals raise those claims and it flows to the insurance companies. They do the analysis, and they come back and they pay out. And there is a good 60 to 90 days gap when the hospital is out of money. So they had access. So the bank embedded their commercial credit card into a platform, and they were having access to the insurance data, and they could see that this is how much the hospitals will end up receiving after that time period. And they could give that temporary credit in the form of a commercial credit card. So that is how hospitals could get access to credit as well. Thanks, Rishabh. Hi, Vishal. So just we were discussing, what is your first, a point of view on the topic, which we are, on the, how data-driven innovations help in the payment space.
It's helping a lot in the topic is relevant, both the data-driven accompanied with AI and ML, that is helping us to leverage customers in the banking, both rural and urban customers, across all the set of customers who don't have credit need, who are not having the credit history itself, how we are able to serve them easily, plus set of customers across retail, agri, MSME customers, and this is helping us in going to the areas to provide the digital solutions to the merchants who have not driven. See, what we see in the urban area is different than what we see in the semi-urban and rural. They are, other than QR, they are not used to many solutions. So, but what we are doing in the bank is we do a lot of digital mailer to enable a lot of semi-urban and rural areas. So the solution what we give to IIT, the same solution we are giving to the normal school. How we do it, we have taken a PIN code of our branches. 900, we have 10,000 plus branches. So we through AIML model 900 PIN code, we have taken 2 to 3 kilometer area. And we are able to identify all the schools, universities, hospitals, and we are demoing to them the digital solutions other than the QR, what will help them in collection and payment. And that is helping us to bring all the schools and universities which collects manually as of now to collect through this system, because there are multiple advantages. One is all cash collection is happening by the bank. It's a white label solution. It's available in 2 days for them. All the recon settlement is taken care. They don't have to worry. They don't have to come to the branch to do reconciliation or cash collection. And many schools are happy to collaborate with us. Every day we get 50 additional schools or universities to participate in this. And the same solution we are implementing in many other merchants and want their life to be easy. End of the day, their life to be easy. Then this is a very relevant topic which is helping us a lot. And हमारे लिए फायदा ये है बैंक के लिए CASA is built up, customers are happy, the stickiness is there, engagement is there, and it helps us a lot.
Thank you, Vishal. So, question for you, Kohinoor, is that so fintechs are nowadays, we were discussing as well, that how fintechs are leveraging data to look at new opportunities, how it can impact their business, their bottom line. So for BharatPe or for you, what do you think that how alternate data can be leveraged for you? I mean, for your thought or what BharatPe is doing.
Yeah. So I think we also kind of talk about alternate data as in anything which is not probably traditional. But I mean, today, if you look at it, I mean, the way I look at alternate data is data which probably is useful, the data elements which are useful purely from a collinearity perspective, right? You may not be able to logically establish a cause and effect, but you do see a trend, right? So these variables become useful when you're building a model, right? But now, if I look at it from lending perspective, right? You would have heard of models which would predict a customer's credit worthiness by looking at whether they're setting an alarm in the morning or not, right? Whether they're calling their home or not, right? So these, I would probably classify these as alternate data because may not have a direct correlation with the actual PD, actual default risk, but does have a correlate, right? So there are a lot of these elements that are there which are being used today. Of course, whenever we do this, we have to be careful that at the end of the day, lending only has two important facets. One is ability to pay, where you try to establish whether the customer has enough means to pay back the loan, and the other is intent to pay. Traditionally, we have been trying to look at bureau, but now we are looking at all these things, right? What additionally we are also trying to do now is that by looking at the payment behavior, trying to understand whether the customer has an intent to pay back or not. Most of the times we leverage payment in the sense that how much spend that customer is doing. So from that we extrapolate that what would probably be his capability, right? Now the long-term aim of any analytical solution is to move from being a probabilistic to a deterministic model, right? So when we were trying to determine, looking at a customer's bureau what his income is, or looking at his payment pattern what his income is, probably when now with account aggregators coming in, we are getting a more deterministic answer by looking at the actual account statements, right? So yeah, we are using a lot of these things, and probably these will keep evolving as we go. And ideal state for us is that whenever a customer is at a checkout place, I would get to understand whether the customer is looking for a debit or a credit solution, a long-term credit or a short-term credit solution, looking for a discount or a cashback or a reward, and then appropriately in real time giving that solution. Maybe we are still a couple of steps behind, maybe one day.
Yeah, I mean, for example, a simple example that a consumer is doing a lot of transactions or visiting a travel app. So, I mean, go and offer a travel credit card or give a BNPL at the point of sale, or something like that. So next question to you, Tanya. You're heading online payments and you're enabling online payments for offline merchants. So, and you've done a lot of payment, pay by points. So, on the loyalty piece as well. So what do you think, how you have leveraged, again, data to enable online payments for your offline merchants?
So maybe just some context about what Pine Labs does. I mean, we're today present in over 1 million merchant touchpoints. Again, just reiterating what I said earlier, these merchants are present across a plethora of MCC codes, ranging from a grocery to electronics to healthcare, hospitals, hotels. We have over 5 million transactions that happen on us every single day. And that gives us immense consumer insights on, for every merchant, at every merchant category, what they're spending on, where they're spending, when they're spending, what competitors they're spending on. Of course, we don't share all of that. But suffice to say that it enabled us to create a pretty robust data processing platform for online as well. Now, reason why Plural was also born, incidentally, was because during the pandemic, we saw almost 50% of our merchants who are in the offline business wanting to create an online presence and go online. And this isn't just the large format retailers like a Chroma Reliance who were just sort of, starting. I would say they already had a presence, but they were now starting to build out. But even the mid-market retailers, the small regional electronic stores. And the reason why they wanted a company like Pine Labs to actually help them go online was because that data and the same payment experience that we gave them was only possible through us. So to give you a very simple example, today when you go to a Chroma offline and you want to say buy an Apple iPhone, that iPhone is of course available on a certain bank offer, and it's available at a cashback with a certain ROI subvention coming in from the bank. It is us who has actually orchestrated this transaction across all the multiple parties. Now, that is possible because A, we have each of these integrations available. B, we're also able to use what we have with our existing brands. For example, how do I ensure that Chroma tomorrow doesn't get into trouble with the brand when that same iPhone is used by a user hundreds of times on, on the store or online? Now, that can only happen if I am unifying customer profiles across multiple channels. And that's really what we brought to the table. So now, for example, if a Chroma works with me both in the online and offline world, I can enable a single customer profile, which means that that same user can only buy the iPhone once and he cannot game the system by buying it multiple times. So there's a reason why customers and merchants would then choose us, because A, we would have the best offer, but B, we would not allow the merchant to burn. We would not allow the brand to burn. Interestingly, we're the only company who also validates IMEIs and serial numbers, so that, even for the brand, there is a lot of comfort that this isn't, let's say, going into an export zone or an export category, and we're able to identify when an iPhone is unbricked, for example. So for us, data has been immensely helpful, both in terms of creating a value proposition for our merchants who then suddenly wanted to also get an online presence, but had the same experience that an offline store had to an online. The second was obviously parity of offers that we could bring across the table. And the third was the risk management that we brought in, because we knew the customer from the offline business as well. So that's how we've tried to leverage it, and it's been good so far. Thanks.
Thank you, Tanya. So I'll just shift from from the business side to the legal side. So Rishabh, we have been advising startups. We are talking about how businesses are leveraging data. So where do you see the intersection of the big data, how companies are leveraging it with the DPDP Act?
So like I mentioned in my opening comments, there's going to be a sea change in how businesses will have to approach uh, big data generally compared to the regime that existed already right now. There are three key changes in terms of the substance of the DPDP Act, which we are coming to see right now. First, being consent and purpose limitation, which is earlier there was a lot more leeway available to companies in terms of what kind of data they can collect and for what purpose they can collect. Although the RBI did have specific regulations in certain situations about the kind of data that you can collect, but now with the DPDP Act in play and sector specific and regulator also coming in the form of a data protection council, uh, the kind of things that you could legitimately now collect data for is likely to get regulated a lot further. As and when the acts get notified, a lot of sector specific regulations are expected. So, say for instance, for payments companies, or generally, if we talk about fintech companies or banks who have multiple financial products out there, some of whom are, say, for instance, in relation to investment, some of whom are payment products, others are credit products. uh, the what you absolutely need from a to be able to enable that transaction, at least the read of the law today seems to be that you should be able to get only that much. And while these kind of restrictions used to exist in some form or the other in some places earlier, most of the time, for a lot of us lawyers, it used to be mostly, seen as a, joke, in the sense that everything could be done through a tick mark consent box. So even the standards at which consent is being looked at in this legislation is very different. There's a lot on the data processor in terms of what kind of consent can be taken and how it can be taken. So that changes a lot in terms of even how product journeys are being constructed, how data is being collected. This will have an impact on a lot of those things. Purpose limitation, similarly, some time ago, there were a lot of, before the RBI started to stop some of these things, a lot of credit companies would be taking all kinds of data, including, contact data, location data, a lot of these things. So while the RBI stopped it for credit companies, but, there is nothing as such for, let's say somebody else like uh, a wealth tech, fintech, which is offering, for example, mutual funds. They could still perhaps get a lot of this extra data. So with this kind of legislation in place, what kind of data you can collect also tends to get limited. Coupled with this is the general principle that overall data needs to be minimized, the kind of data that you're picking up. So I think there's going to be a lot more lawyering around, you know, justifications for each of these kinds of data. I think definitely for a lot of people also the days of collect whatever you can have definitely gone past, and there will need to be a lot. So say for instance, if a credit company wants to say that they want to collect location data, they'll have to give specific reasons, why they are doing it. So what this brings me to generally is that although in the beginning this might look like a huge difficulty and inconvenience, overall I think what the Data Protection Act over time, as the regulator and all the players tend to mature, it gives us an interesting opportunity that data collection can finally happen with a lot more trust in the system. If fintech players, for instance, are able to figure out and build appropriate practices. Yeah, so if fintech companies are able to create the right processes, they can
Right.
operate in a sphere of a lot of enhanced trust uh, uh, through this kind of data protection regime. Partnerships can be a lot easily and done in a lot better way. Today, for instance, in case of co-branded credit cards or a lot of fintech financial institution partnerships, regulators have this question of what is happening with the data, where is
Right.
it going, who is using it. So I think this legislation kind of brings out this hope that there is an opportunity of creating this enhanced trust.
Uh, okay, thanks, Rishabh. So, Aditya, at Check, you are enabling easier credit management. You have this feature called Pay Together, which can you can pay multiple bills in a single transaction on the reward points as well. So, how do you think how you've leveraged data for easier credit management and better customer engagement?
So, pay together is fairly a logical and an obvious solution. In India, you have only finite number of repayment cycles by most banks, and they are mostly congregated between the 29th to the 5th of the month, which is where the maximum amount of repayments happen. So, and if a customer is multi-carded, there is a good premium customer is not trying to pay always on the last day. So it's just very logical for them to be given the option, just come and just do one single transaction. Think about this like an e-commerce transaction and we'll take care of the rest. Because it is so simple to understand, now over the course of the last 15 months, more than 10 to 15% of our consumers use their product automatically. That one drives massive wallet share for us, and second drives stickiness. How we use data, like for us, we are actually, if our data is inaccurate, we're dead as a company. We can't show you the wrong bill and then you end up messing it up. Today our payout success rate is 99.4% over the 5 million transactions that we've done. And the challenge about that is that still the 0.5% of transactions payout failure that happen, they are actually human beings, where they trusted us to make sure that the bill will reach or the payment will reach on time. And when that does not happen, there is a financial problem that they have. Not only has the money not reached, I can still return it back, but it can translate into an interest, it can translate into penalty, and then people will feel that their bureau score is getting messed up. So for us, accuracy of data and using that data for execution of transactions is extremely important. I think the second layer of data that we're going to be using immensely, and we've just started, is that we've started with credit underwriting, and we started with consumer loans and credit lines, and we're sort of back to asking fundamental questions. The gentleman talked about the fact that credit is all about understanding ability and intent to pay. That's what we were all taught 20 years to 25 years before. I think to me, the guy who will be able to win this is somebody who will be able to understand what lies between ability and intent, and there isn't a lot in between. For example, you have a consumer who has 3 credit cards, 1 personal loan. When you're pulling up a bureau report, the two cards are active, the personal loan is active, but the customer has had a flag of settlement on the card the 6 months before. Okay, but the customer has been using 3 cards and a personal loan for the last 2-3 years. Now, whether the guy had an ability issue or an intent issue is now, today we plain that as a red flag, a civil bad, not interested, correct? But when you start asking if the guy had an intent issue, then why he or she did not defraud on all 3 cards? Why did the customer continues to pay the personal loan? And that is where, to me, the next level of solving the gray via these kind of data will be the play to win. Unluckily, a lot of data today, especially underwriting data, is about judging consumers. Doesn't allow the quality of banking system and banking update that we've had for years. A bank messing up does not get reported to the bureau, and just try and solve a problem with the bureau. The bureau will go and talk to the bank. You will never, most likely, you will lose the hope, and you say, okay, just pay me the money. I'll pay the money and just clear my account, correct? So to me, the gray is right there. That will fundamentally get solved via credit, via data. The other part of data underwriting, which is the advantage that we have at CheQ, is that say when today we're opening credit line or loan products, if today I can see I have a consumer who has been on my platform for the last 6 months, has made, let's say, 20 transactions or 15 transactions, have credit cards which are worth 4-5 lakh rupees line. If I continue to just trust conventional data wisdom, that I have to figure out his salary, I have to go to an AA and figure out whether he's salaried or self-employed, or whether what he's declaring is right or not. Once I'm able to do KYC and I use just bureau as a red flag, if I can't underwrite data on my own, I think I am just messing it up. So for us, we're not very excited about data which is available publicly. We're more excited about the fact that how we're going to be synthesizing the data that we have and translate it into decision-making results, so that we know that we're putting our money where our mouth is.
Thanks, Aditya. So yeah, trust signal is the third dimension, other than the liabilities, diabetes data dimension or credit bureau. Trust signal is probably the third dimension. So Swastik, you at Winvesta, you are enabling cross-border payments in multiple currencies. I think 37 currencies. So how do you think that you have leveraged data again in enabling cross-border payments for businesses, freelancers, individuals?
Yeah, I think one core thing is that you've got some intuitions, right? And you start with the intuition that, for example, almost all customers or the single biggest use case will probably be dollar payments. And then the market whacks you a little bit every now and then and tells you, hey, there's actually a reasonably large, GBP INR conversion flow or a euro ones. And so what we did in our product was we wouldn't open it by default for everyone, but you would need to request a new additional currency. And those requests started telling us, okay, there is actually a flow in this corridor, which otherwise didn't exist. So I say that's one way for us to figure out, and how that actually helps us fuel as well is a lot in changing our marketing strategy, our communications about whether it's an inbound marketing strategy, an outbound one. How do we think of a partnership model or a B2B model as well? Which are the corridors then we start looking more at? How do we then go ahead and build our vendor lines, right? Additional payment providers in the back end who will be able to provide us new verticals as well. A common refrain is that, hey, my customers want to be paying through cards and that's why I can't pay you. I don't want to use what you are. And when we capture this little insight, whether it's in a call and conversion, or whether it's actually that a customer had already done a payment, but then we lost and we didn't see him coming back, that was because, okay, maybe his end client, the sender of the money, is finding it inconvenient to send to a bank account as compared to swiping his card, or because that guy gets credit card points. So that results in us changing, again, this into a model of, do you really know the true fees that you'll end up paying if you do card collections, right? And that helps us drive our value proposition of transparency and And the three core pillars for us are helping reduce this cost, making it transparent. Why is it that you don't get the Forex rate that you would see on Google when the money really hits your bank, right? And finally, why does it often take forever and you don't have clarity on when the money will really hit your bank, right? You could travel to the US and back quicker than sometimes the sender sent you money, right? So all of these insights, we find a way that we are looking at these small product changes which fuel our marketing. But then also on the flip side, I'm very wary of data paralysis, right? See, we could all very quickly pick up anecdotes of where it's worked for us. But very often, are you sure there is an insight inside here? Or is it just Occam's razor, right? Are you trying to find malice where it's technically stupidity at times, right? Or it's just a factor which is not worth your attention? Because the one resource we have to safeguard, especially as a young firm, is our time. And we don't want our team going out on these random, searches saying data is telling me something when it possibly isn't as well.
Thank you. So the last question to you, Vishal, is that while you have answered what you are doing as a bank, how you're helping your 10 crore plus customers, and how is it helping the bank as well. So, and you've, invested in a data analytics center in Bangalore as well. What do you think additionally, as a bank, what is it that banks can do as well? And overall at a generic level, what banks can do here?
So we are blessed to have 10 crore customers, and every year 1 crore plus customers adds to the platform. The main focus is activation, acquiring, and digital partnership to increase the digital business. What we see on the rural part, still many customers are coming to the branches. 5 lakh customers every day come to our branches still. That is the way rural or Bharat is. And we are helping them where, as a bank, what we are doing is we build a model. I'll tell few multiple areas which are there. We have divided customer segmentation across all these 10 crore customers. We have built more than 100 plus AML models to be able to give these customers sales, marketing, customer service, complaints, frauds, and what cross-selling we can do. And these all have been propagated to the branches and the call center. On the fraud area especially, I will tell, because that is the main area which is there. We are working with RBI Innovation Hub and IT Kanpur. We have built a model with more than 90% accuracy on mule account. Because whatever we do, there is still a huge number of mule accounts which are happening. So that we have built a model which we can propagate to other banks as well. Secondly, on the fraud, we are able to predict as a default which customers will become default. Because we have the history of the data with the patterns. And that is helping us to build our collection system more stronger. Plus, what collection person should do, which way customer will be able to collect or get the money easily. That is what you're doing. On increasing our digital business, based on the customer segmentation we have, we know these set of customers with the DPI infrastructure which is there with the bank, we are able to go to all our merchants, mid, small, large, that we can give you multiple facilities. See, these set of customers have a lot of payments to be done, collection and payment both. So we are giving the API connected banking to them, where from their ERP solution, whichever is the ERP, they can connect and do the payment within few minutes. Secondly, all the collection we take care of them. We are giving them the payment gateway. Many of these institutes don't have a payment gateway solution yet. Many of the institutes don't have website itself. So we are building website for them. We are building the payment gateway solution for them. We are building the API integration with them to make the collection and payment easily for them. There are a lot of customers who are still not in the credit itself. With this data, we are able to do out of 10 crore customers that many people have with the reference and the branches, 50 crore women, that is what we are targeting, to give them self-help group loans, which are not in credit yet. We want to give a low ticket size to them, where our branch person goes to their home, 20 women together, within 30 minutes, we do the KYC through Aadhaar PAN, and disburse the loan immediately within 30 minutes to them because we want them to be in the credit history. In addition, many farmers, they want credit. They have agriculture land and all that. So we are working with the state government to have their land become digitized. So MP, Tamil Nadu, Bangalore are the one we are working with them to digitize that, and on their land we can give the loan to them. In BMTC, all the POS where the ticket booking happens, we have made a reusable solutions where we can deploy within few weeks because we want all of them to use banking as a solution and all. And all the merchants, they want to partner with bank because it's not only the solution, it's a lot of other facilities which they get, which helps them on the credit or the limit or the deposit or whatever they want. Bank is the only one which can provide with them. And we have worked with many fintech partners, both on the POS as well as on the payment gateway, to build the solution to them. And that is what we will do it. And we want maximum on the digital, these customers should come, but only we want to be caution on the fraud. We don't want these hard-earned money to be loosened. So that's why we put a lot of control and cautious approach on the minimum fraud and able to give best service to our customers and bring them in the digital journey.
Thank you, Vishal. So yeah, we are, the time is running out, so I think we'll have to close the panel. So I think we had a fair share of ideas coming from, if you see also the profile, we have fintechs, non-banks, banks, from the business side, from the legal side also good representation. So I believe that we have been able to answer a lot of queries. Sorry, I think time is out. We'll not be able to take questions from the audience. Thank you so much. Have a lovely evening.